how to know when to buy and when to sell. The markets are based on human psychology, fear and greed that drives buying and selling behavior. Today, I'm going to show you some tips and tricks on how you can see what's likely to occur with high probability before it happens. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I used to focus on currencies alone, but now exclusive on cryptocurrency. So let's dive straight in. Right, theory first. Anyways, rules and guidelines. We're moving to the next level right now. Let me just pull up my laser over here. Right, once a five-wave pattern completes, so you know about these five-wave patterns, right? And you should be getting familiar with it because this is what I use as my framework to read the markets. Should be corrected by an ABC correction, minimum 3 waves. Other complex corrections can form, right? So we've got 1, 2, 3, 4, 5, followed by an ABC. This is the template of the psychology of markets, and it applies around 50 to 70% of the time. With Bitcoin, Ethereum, younger coins, small caps, medium caps, large caps, etc. Wherever there's humans and volume, then it's likely that it's going to occur. And there's degrees of higher counts and lower counts. All right, so this is the correction part. Correction. We're focusing on the correction right now. Correction waves within a sequence are waves 2 and wave 4. So this is a wave 2 and this is a wave 4. So as the market unfolds, right, then you got this wave 2 happening, A, B, C, and that's a correction, right? Very, very important. And then you got this 1, 2, 3, 4, 5 over 3, and this wave 4 happening is a correction. So you have this larger correction, and then these smaller corrections within the correction, within the whole sequence itself. Very important. I know I'm covering it fast. I do have a foundation, well, it's kind of like a foundation, intermediate, advanced masterclass on Elliott and Fibonacci. It was in the link below. It's free, and I cover this in a bit more depth. But I just want to kind of give you the correction part today. And then last but not least, have I got another pair? There we go. Boom. And then, because I want to go to a live chart and show you this. One of the impulsive waves meaning wave 1, wave 5, and wave 3 and wave 5, it will usually be noticeably longer in price than the other two. Usually in financial markets, it's wave 3, but in commodities like gold, silver, wheat, juice, coffee, commodities that are seasonal, especially if they're seasonal, wave 5 tends to be the most impulsive. What I've realized with crypto, similar to commodities, wave 5 with crypto, especially in bull markets, wave 5 tends to be the extended wave because of panic buying. Panic buying, really, really important. So what we're going to do next is we're going to jump into a live chart, right? I've chose Creator. Creator is a powerhouse blockchain as a service, and they're quite new as well. They're quite young. I think they got huge potential. But we're going to go to DexTools, copy the contract, go to DexTools because they've got their Coinstarter launchpad. But I want to just look at the price action. Let's forget what they do for a second. I love just looking at price independently of fundamentals because some people don't realize you can just independently look at pure technicals, right? So what we've got here is Coinstarter. You can see I've been following this for a while. Coinstarter is creator token, which you need for the Coinstarter membership. So what are we seeing here, right? All right, what we're seeing here, in my opinion, based on Elliott and Fibonacci, is an impulsive wave. You can see that's really, really impulsive. And then we've got this overlapping structure. Bump. This looks like the end of a wave 2 correction, but we've got this lower low happening. So at the time, actually, I thought this will be the end of a wave 2, the particular type of wave 2. But what will invalidate that count is if we get a price movement below this low. And clearly, we broke that low over here. So now we have to reevaluate and go, oh, doesn't look like that's the wave 2. It more looks like it's a slightly more complex correction, but now we're in this wave 2 zone. So what we can do next is we can go, what's likely to happen now? Now, again, just for a second, let's just say we don't know what this is, whether we've got these tokens or haven't got these tokens. Just look at the price psychology. What is the price psychology telling us? Well, it's telling us we've had this amazing move up where a lot of people bought down here, made some good profits, and now people are taking profits. That's just normal psychological behavior. Fear and greed, optimism, pessimism, profit taking, right? But there's also people that saw this movement and went, man, I missed out. And now they're seeing a second bite of the cherry. There's more proof of concept. There's more, projects being launched on the Coinstarter membership, etc. So now we can independently objectively look at this. I can look at this and go, right, Fibonacci, right? Typical correction zones is 50%, 62, and 78. So we're in that zone, right? We're beyond the time. I don't even need to do time retracements. But what I can do is look at, actually, I want to do this piece of time. Right, this red line here, I'm just going to remove the others, is how long it took for this wave A to form. And we projected it forward. And now we've got this price and time. Now we're going to do one last thing, a bit more advanced, but I think you're ready for it. Is we're going to measure the price movement of this wave A. I know I'm doing it quite fast, but I have got the masterclass in the link below. So if you want to go into more detail, these are the two price zones for a typical wave C. It's 100 to 1.618. Let's get rid of this. We don't need this here. So now we've got these two zones, and I go, right, it's likely we are going to see the end of this correction. Not guaranteed, only probabilities. We got this zone here. In fact, I'm going to do one more. There's one more. There's something called an external retracement. I know it just looks like lines. I know. But trust me, these are psychological buying and selling points. Human psychology that plays out time and time again. And now we've got these two zones here. Bump, bump. So now we've got these two really clean zones here and down here. Right, so we are likely going to see, not guaranteed, that this is going to hold to be a wave 2 low. If that's the case, there are some fundamentals that line up, but if you're just looking at purely technicals, this looks like a really good, healthy wave 2 low. Then what typically happens after a wave 2? Guess what? If you can count, you probably guessed it. 3, right? 3. Wave 3. I'm going to do it like this so you get a bit of perspective. Because sometimes it's hard to have the vision, right? Hard to have the vision in the heat of the moment. Doesn't mean it's going to happen. Nope. Is it probable? Yeah, but I'm more covering just the textbook Elliott wave Fibonacci ratios, and the typical minimum wave 3 is 1.618, and the extended wave 3 is 2.618. So now we've got these two zones here. So there's likely to be some point in the near future, especially if Bitcoin starts really getting bullish again in these two zones. So there you have it. So today we covered some corrections, but the main part here was this correction here. This is corrective, overlapping waves. Wave 2 is hit time and price, and now we're likely going to get a wave 3 in the very near future. But the reason I'm showing you this is you want to have this skill set so you can apply it to your portfolio. You can look at the market to see, I'm waiting patiently. Am I buying when it's at a high, or am I going to be patient to wait for a wave 2 correction? A wave 2 correction, according to W.D. Yen, one of the forefathers of technical analysis back in the 1800s, said one of the safest times to buy is on a wave 2, on the first pullback, which is a wave 2, right? And the first pullback tends to be quite deep, 50%, 62%, up to 78.6% is the most common regions. And when we see that, it's like, boom, there's a good buying opportunity, and you can pounce and then hold it for that wave 3, and then potentially for a wave 5 also. So if you like today's video, like, subscribe, hit the bell notification. If you want to upskill yourself during this bearish part of the market, take my free Elliott wave Fibonacci masterclass. Is in the link below. Let's finish on a quote. Bruce Lee, what does Bruce Lee say? In chapter 6, it says, "A wise man can learn from a foolish question, then a fool can learn from a wise answer." Yep, that's the truth. It's the truth. Bruce Lee said it, so it must be pretty good, right? But the thing is to upskill yourself to the level of questions that you ask is going to be at a higher level. Because a lot of people don't realize, obviously you're watching this on YouTube, so I need to remember to remove this mouse. I keep kind of forgetting. I keep going, need to get it over there. It is what it is. I need to put like a post-it note on my laptop that says, "Remove mouse from your face, Jagir," because people are probably trying to do that on the screen. I know you've told me, so I'll do my best to do it in the future. What you want to do is realize that you're watching this on YouTube for free, and there's a lot of valuable information. So if you don't know something, if you Google it, YouTube it, often within 5 to 10 minutes or 30 minutes, you'll get to know it. And then when you get to ask questions, you can ask it at a higher level. So you can always kind of keep upskilling yourself. So like, subscribe, hit the bell notification. What we're covering tomorrow, I'm doing a series of lessons right now, because during this bearish part, I want to sharpen your axe so you can pounce on the market, because I think we're going to have a parabolic end to the bull cycle for 3 to 6 months, maybe March, April, May, June. And I think we're going to see some 6-figure Bitcoins. I think it's going to happen. I think it's highly probable, and we're really ready for it. So next, we're going to cover some more stuff on Elliott wave. Yeah, and we'll just keep combining this. There's a few key lessons that I want you to learn. And if you want to wait to the next lesson, wait for it. Otherwise, just take the masterclass and you can kind of speed through and do both. All right, I'll see you soon.